Social distancing, which includes staying home for 21 days to help flatten the curve. They're on day 11 right now, so another 10 days to go. The Republican Governor Pete Ricketts in Nebraska is with me now. And sir, thank you for your time. What are you seeing in Nebraska? I've got 15,700 who have tested positive. Total tested. 1,474 have tested positive, and the number of deaths in your state at 28. What are you feeling in Nebraska when you consider the health center in Omaha was the first to take in COVID-19 positive patients from the cruise ship in Japan 2 months ago? And yet you see everything that's happening in New York, and yet here you are in the Midwest with what could arguably be a very different reality, sir. So what do you tell your people at home?
Well, I think we're very blessed to have the University of Nebraska Medical Center in our state, because they were able to brief me on this very early on, as you mentioned, when we took those Americans in from Wuhan when they were looking to quarantine them. Also, some of the first patients we had were treated there. Our first patient actually was March 6th. And we implemented our restrictions with regard to the non-pharmaceutical interventions very early on, actually pretty much concurrent with New York. And I think the difference is New York has a much higher concentration of people, but they also probably had the virus much more spread throughout that population than we did here in Nebraska. So relatively speaking, because we took our interventions early, we were able to really tamp down that spread of the virus, flatten that curve as everybody's been talking about. And it's been effective here in the state to the point where today I announced that we will begin elective surgeries in Nebraska starting on May 4th under certain conditions.
Okay, so that's good. That's great to hear. But in 10 days, how will life change based on your plan right now in Nebraska?
Well, we still have, the rest of the month here under our stay-at-home recommendations. We're talking about, hey, stay home, stay healthy, stay connected. We've got 6 rules to help people stay home and keep Nebraska healthy, including, stay home, go to work, but stay socially distanced, shop once a week, but don't take the family, help kids, seniors, and exercise. Those are our rules. And as we approach May, what we're going to be doing is looking to gradually lift the restrictions like we just talked about with regard to those elective surgeries.
Okay.
And understanding that the social distancing we're doing now may get less restrictive as we go through May and June, but we're still going to be living with that social distancing for quite some time, at least until we even get our vaccination.
Thank you for your time. Computer's going to cut it off. We'll check back in with you. Thank you, Pete Ricketts in Nebraska. Here's Neil. See you tomorrow.
The virus and tumbling interest rates, that you know. The virus and tumbling oil prices, that you didn't know. You ever hear of negative interest rates? Take a look at what happened today. How about negative oil prices? That figure on the top of your screen on the right side, that's a negative $37.63. In other words, it was down more than $55 a barrel. They paid you to take it off your hands. Just imagine that. And all of this as the world remains stopped by the coronavirus. So stopped, it is slowing everything down. And now in the energy markets, turning it the other way. Welcome, everybody. I'm Neil Cavuto, and this is your world. And what in the world is going on right now? Imagine going to the gas pump, filling it up, and all of a sudden the gas station attendant giving you money for the privilege. That's kind of what happened today. It was an odd confluence of events that suddenly called into question this global recovery, because even as many countries try to get back in gear, and at least a dozen states try to now fashion a return from sheltering at home, the fact of the matter, when it came to oil, there was nowhere to hide. It also weighed on stocks, on the belief that maybe what's happening in the oil markets is telegraphing more problems for the general markets. That might be an overstatement, because the markets by and large have been holding up, today notwithstanding. But this oil thing is a head scratcher for the ages, and yet another reminder that the coronavirus is a big issue on our cash. Jackie DeAngelis with What the Heck Happened? Hey, Jackie.
Good afternoon to you, Neil. This was certainly historic in terms of anything I've seen with the oil market, but I do want to try to explain it in a simple way as you tried to lay it out there so people can really understand this. What the market basically told us today was that a barrel of oil was worthless. Not only would your investment go to zero if you were expecting delivery tomorrow, but you would actually owe $37 for taking delivery of that barrel, and there would be very limited options in terms of where you could store it, and storage is very expensive right now. The reason is there is no global demand right now. People are not working. They are not traveling. They are on lockdown and they don't need oil. And that's why you're seeing that negative number on your screen. Now, there's been some talk about how the May contract, the one that expires tomorrow, is not the one to focus on. Look at June. That's the front month. It's trading more around $22 a barrel. I am being told by some experts that when that opens tomorrow for trade, that people will start to sell that as well. That is something that we're going to have to watch very, very closely. But the reason that there's pressure in this market is because there's no quick fix to the lockdown problem, to the coronavirus itself, in terms of getting things back to normal here in the United States. And there are so many facets at play. Even at $22 a barrel, it is very difficult for an energy company to be profitable. And many of the smaller firms are highly leveraged. They've got debt to finance their exploration and drilling, and they are going to have to pay that debt off. The concern is, will they be forced to go bankrupt? Will more jobs be lost in this country? And there's so much we don't know about the coronavirus right now, how quickly people can go back to their activities. And because of that, this recovery that Wall Street is looking for may take a lot longer than originally anticipated. Oil experts, executives on Fox Business today suggested that yes, we're talking about slipping into a recession here, but maybe it goes deeper. Maybe it is a depression. Having said that, the same way 9/11 brought fundamental change to the airline industry, to how we live and interact with each other, this pandemic might as well. And as one industry suffers, in this case energy, another may prosper, like some of the technology companies that you highlight on your show. That's why the stock market declined today, but there wasn't the worst carnage that we've seen throughout this pandemic. Still, it raises a lot of questions, and people are starting to wonder, is the U.S. government going to have to step in and bail out the energy companies? And also, it highlights the fact that this is not only a problem in the United States, it's going to impact the entire globe. We are talking about the Russians, we're talking about the Saudis, and all the other OPEC producers as well, Neil.
Jackie DeAngelo said, well, very nice the way you spelled that out there. Now, we were debating about whether you start with something heavy duty and wonky like this when it came to oil prices, but we did think it did more your attention here because it's everything to do with the coronavirus, everything to do with the fact that it has stopped our economy, a lot of economies around the world, and demand has just shrunk. What's important to remember here is you might recall when a couple of the OPEC countries and the so-called OPEC plus countries had agreed to rein in production from anywhere to 10 million to 20 million barrels a day. A lot of people thought, well, that will certainly goose prices. With the collapse in demand because of this virus, it would take cuts of up to 30 million barrels a day or more to turn this around. And that's probably unlikely. And given the sinking economies here, you need even more than 30 million barrels a day. David McIlvaney follows this very, very closely at his firm, and he's here to join us right now with what's in store. You know, David, we did focus on this one expiring contract here. We are looking at some of the other contracts that come into play. They are showing weakness, not nearly this bad, but what are you envisioning for oil prices, gas prices as a result of all this?
And so you have a 24-hour problem, and then you have a 30-day problem. And this is the contract issue because the May contract is due. So tomorrow it rolls, and there's no place to put oil. So you've hit the nail on the head here. We have too much supply, not enough demand. And because the WTI contract settles, and you actually take physical delivery of those barrels in Cushing, Oklahoma, there's no place to put the oil. They are just about max capacity. So what do? You reverse it. And as your earlier guest described, you're actually being paid to not deliver. So it's a very interesting time. If you look at the June contract, now you have 30 days yet again to solve that problem. Where are we going to put it? Are we going to put it in St. Croix? Are we going to put it in Aruba? Are we going to, bring back online a mothballed facility? Because right now, all of your functional spots are taken. Even your tankers are taken. So this becomes supply and demand, as you described well. Up to 40% demand destruction. And what the Saudis and OPEC Plus decided to cut by less than 10 million barrels a day, the math does not work. The math does not work. So the bottom line is today, and the pricing volatility, today comes with fatalities.
Now, I want to try, if I can, David, and you can correct me, as you're very good at doing in a very erudite way, this notion that the half-full glass, that is that gas prices are going to be much cheaper, heating oil related prices are going to be much cheaper, and that will actually work to help consumers once they are de-sheltered from their homes, and that will be a net good. What do you say to that?
I completely agree. I think there's two positives here. One is the consumer gets the equivalent of a tax break. And number two, you really clean up the oil industry. We've had so much loose credit. You mentioned earlier that rates have been going negative in certain parts of the world. You understand this has not happened in 5,000 years. And I don't think oil prices have ever been this negative in the history of the world. So we're talking about unprecedented events, and some of it does relate to credit. So I'm positive that there's going to be a cleanup in the oil arena where companies that really have been kept alive on cheap money, they will go the way of the dodo bird.
You know, David, I'm old enough, sadly, to remember the 82 and 83 oil experience when prices crashed. And, you know, we had the big oil guys who became bigger. It was when Exxon and Mobil merged after that, Exxon Mobil today. And a lot of the wildcatters and smaller players, talking about the dodo birds, that's exactly where they went. Do you envision something like that now? Is there a huge shift going on beneath us, beneath all the coronavirus talk that we're not appreciating?
Yeah, this is a reckoning day for your independent E&Ps and your service corporations. So if you're, we're talking about existential risk here, where they are being taken out. They will not survive this. You've got borrowing-based redeterminations this month, which means the banks are looking at the value of all of the assets and saying, wait a minute, can we lend on the same terms going forward as we did in the past? So even if an independent E&P could survive, the terms of their loans are being shifted, and that's, you're seeing a tightening in credit conditions for them, which is catastrophic for them. So I think that's the real issue, is you have a remaking. Where you have small independents that may not make it, you have other groups that will do well. Some of your majors with strong balance sheets, they're going to come out of this owning pristine, well, they're going to come out of this owning assets at a very inexpensive price.
All right, we'll see what happens. David McElvaney, I very, very much appreciate it here. And to put it into perspective here, this big slide, again, it did not apply to futures contracts beyond May and the ones that expire tomorrow, although they did slide today. And again, we are back at levels in some of them that we've not seen in many a year. Of course, what happened today is something we've never seen in any year. So keep that in mind. Meanwhile, I had a chance earlier today to talk to Mark Cuban about this phenomenon. The Dallas Mavericks owner, billionaire investor, weighed in to say this is a sign of something much bigger. Mark Cuban.
I think we really have to ask, is the oil market telling us that even if we reopen up and allow some of these small businesses to get back to work, is the demand going to be there? I mean, I think we really have to take into consideration that, you know, we're going through a reset and things are going to be different. We can't expect them to be the way they were.
All right, so what he's saying is if we start getting back to work and we start coming out of our homes and businesses start to reopen and state after state we're hearing talk and plans to that effect, then a lot of this then potentially unwinds. But will it happen fast enough, significantly enough, to change the equation here? Bill Simon, the former CEO of Walmart, with us right now. Bill, what do you think that what's going on with oil is maybe a snapshot how we feel right now with the economy kind of frozen in place? But as we open up, whenever that is, and however we stagger it, all this starts reversing. Do you agree with that?
I think it does, Neil. I think you're seeing, as you described, a trading glitch or a trading situation. The consumer's in a completely different place. The consumer's, locked up, but chomping at the bit, as you can see from some of the news and some of the protests. I think people are getting ready to go, and by and large, through a very difficult situation, I think the consumers held up pretty well. I think that, even businesses that are shut down have found ways to operate and move online or curbside pickup where they're allowed. So the demand is still there, at least for consumer products. And I'm pretty encouraged that once we get into the crawl, walk, run, sprint, startup here, that demand for oil will go back. I think that's probably one of the only things you can be guaranteed, that price of oil will go up.
Walmart, Amazon, some of the other key retail players have held up pretty well in this, maybe precisely because people are kind of sheltered. How long do you see that sort of being the wind that maybe the economy is back if things sort of stabilize?
Well, I think, with the discussion about certain states beginning to build opening plans and begin to move forward, we're probably in that crawl phase. And as people feel more and more comfortable when they come out, more and more businesses will open up and start to get back towards, a better liquidity position. I don't know that they'll get back to normal very quickly, but throughout the course of the summer and the fall, provided that things go the way we hope they do, I think the consumer will be back. I think the consumer is still strong.
We would like to hear progress on the virus itself. And I get that. We want to see continued slowdown in hospitalizations in New York. We're getting that. We get some inconsistent reads on new cases and certainly deaths. So we're not out of the woods yet. And I wonder if that potentially delays a lot of the bigger states, particularly New York and New Jersey, Connecticut, some of these others that are pushing this off until the middle of May at the earliest. What do you think?
Well, I think they're in different situations, and they are all across the country, and they have to do what's right for the people that are there. But by and large, I agree with you. It's not going anywhere until there's a vaccine or a treatment, and we're going to have to figure out how to learn to live with it, at least for the time being. I don't exactly know what that looks like, but I know what it doesn't look like. It doesn't look like staying in your house for 18 months. So I think we're going to have to, following government guidance and experts' views, figure out a way to move forward. And like I said, it may be a crawl at first and a walk, and there'll be a lot of masks when we get out. But I think we'll eventually have to figure out how to deal with it while the science catches up with treatments.
I just wonder, when 6 out of 10 Americans, both on the subject, sense that this is still an anxiety event, and that they're concerned we're rushing things. What did you think of that?
I tend to agree with that. I think that, you could open today and I'm not sure anything different would happen. I think there's a lot of people that are still scared, but maybe tomorrow or the next day, people will start to move out. And the longer that we're able to, keep a control over the contagion, I think that people will become more and more comfortable. So staying home right now is a good idea, but eventually we're going to have to come out, and we need to know what to do when we come out. And so the guidelines that are laid out are very, very important to follow and very important to go through that phased approach. But we do have to come out. We can't
Bill
stay
Simon, we do eventually, my friend. Bill Simon, the former CEO of Walmart. That's the big question: when we come out, how we come out, because a lot of people get impatient about coming out. The latest protests in Arizona, mirroring so many in so many states. Get to this.